Recent projections by the International Monetary Fund portray a bleak picture for the Indian rupee vis-à-vis the American dollar. The IMF's forecasts say that the rupee exchange rate, after a steady decline, will be 94.4 against the dollar in fiscal 2028. According to the agency's projections, India's nominal GDP is expected to grow 13.4% in fiscal 2023 in rupee terms. In US dollar terms, the corresponding figure is 8.2%. The difference is down to the change in the exchange rate, with the rupee seen declining to 81.5 per dollar in 2023 from around 77.7 per dollar in 2022. Today, the rupee is at 76.27 to the dollar. If the IMF predictions come true and the rupee continues to deteriorate, it will have a range of effects on the lives of common Indians. One of them is a rise in inflation levels. This is because India needs to pay in dollars for its imports. For example, we pay in dollars to buy commodities like crude oil, semiconductors, electrical machinery, mechanical appliances, and precious metals. Consequently, the end-use products of these import materials are also likely to become more expensive. Another very apparent result of the rupee decline would be that foreign travel and foreign study will become more expensive. The Reserve Bank of India increases the repo rate to tackle inflation if it reaches dangerous levels. The rate hike announced on May 4 is an example. When the RBI raises interest rates, the cost of borrowing for banks also increases. Banks then pass it on to their customers by increasing the interest rate on loans. It is feared that both the inflation and the increased rates could also impact the rupee. The exit of foreign investors has caused a sharp fall in the equity markets over recent weeks. If foreign investors pull out of Indian equities, it will again lead to rupee depreciation. This would mean people's investments in stocks and equity mutual funds are also likely to witness a decline. Not just equities, even one's returns in debt funds could shrink. This is because in a vicious cycle, when the rupee depreciates, it leads to a sharp rise in inflation, which necessitates the RBI to increase rates. And debt funds perform poorly during increased interest rate scenarios. In short, the rupee depreciation could make the average Indian's life rather tough. A Federal report.